All right, let's get straight into it. Welcome to today's Explainer. I'm Steve. Look, if you've been glued to your charting software over the last 24 hours, you just witnessed an absolute textbook masterclass in multi-asset capital liquidation. High-frequency sell programs spent the entire regular session just cascading through trailing stop losses. They were literally trying to trick the retail crowd into thinking the entire bull market architecture was falling out of bed. But no way. We are going to look right past that noise. Today we're breaking down the macro grid programmatic purge, that severe Bitcoin liquidation, and the massive energy capitulation that just absolutely slammed the terminal.
Okay, let's take a look at this. On this desk, we don't trade on panic, we track the hard numbers. That right there, that is the exact tactical mindset you need to survive a brutal session like Thursday, June 25th, 2026, when the market undergoes an intense, high-volume programmatic purge like we just saw. Emotion is your absolute worst enemy. Those high-frequency algorithms drove massive liquidations across alternative asset classes, creating a total wash, just to flush out the near-term retail float. But here's the thing. On this desk, we do not trade on panic. We look past the chaos of a multi-asset capital flush. We track the hard numbers to map out exactly where the big fund managers are stepping in to defend the tape. So let's open up the ledger.
Here is our briefing docket for today. 1. The multi-asset capital flush. 2. The energy curve capitulation. 3. Bitcoin's algorithmic liquidity hunt. 4. Berkshire's value allocation shift. And 5. Professional trading directives. We're going to systematically lay out this deep technical reset so you know exactly what's happening beneath the surface.
Starting off with Section 1, Multi-Asset Capital Flush, Navigating the Programmatic Purge.
So the bears really pressed a massive programmatic advantage today, ahead of tomorrow's big macro data drop. We saw a severe breakdown across crypto and defensive columns, triggered as the street basically rushed to align their exposure. When individual software and mega-cap growth metrics face severe valuation compression, well, it drags the active indices into a really steep intraday test of key support shelves. Just looking straight at our daily scoreboard here, you can see the severity of that test. Check out our September micro S&P contract, ticker /MESU26. It absorbed a totally steep afternoon flush, dropping over 1.4% to drop anchor hard right at 7,435. It held its primary 50-day EMA support shelf on massive volume. And then look over at August Gold /GCQ26. It remained completely locked down under heavy selling pressure, literally frozen at $4,126, just waiting on that macro data. The broader futures curve saw some really heavy absorption today.
Moving right along to Section 2, the energy curve capitulation, extracting the war premium. Minus 5.11%. Let that sink in for a second. While the indices were fighting for their lives to find support, the real structural destruction took place right here in the energy pits. Our active August Brent crude contract /BZQ26 collapsed 5.11% today. It washed all the way down to settle at 74.71. That is a complete structural breakdown. And believe me, it was no technical accident.
Now, the fundamental catalyst behind that incredibly violent move is what's truly interesting. The final, formal signature on the U.S.-Iran Maritime Treaty over in Switzerland that completely broke the back of the oil specs. What we're witnessing live on the tape is the total, complete extraction of the geopolitical war premium that had been artificially inflating those energy contracts for months. And you know, this brilliantly illustrates why context is literally everything in this business. You might look at a crude collapse and see a massive market failure. Actually, scratch that. For our index execution, this drop is a massive, long-term fundamental win. It completely alters corporate balance sheet models. Think about it. A collapse in crude basically acts as an immediate corporate tax cut across the entire industrial curve. It massively drops transport and manufacturing overhead. The automated desks aggressively use this multi-day wipeout in the energy pits to justify an intermediate defense of the index curve. It gave the index bulls the exact fundamental cushion they needed to step in and stabilize /MESU26.
All right, Section 3, Bitcoin's algorithmic liquidity hunt, sweeping the retail float.
So, while the equity desks were sitting around calculating cheaper input costs, the crypto complex endured a brutal, highly targeted programmatic wash. Our front-month June Bitcoin futures /BTC-M26 completely fell out of bed. It fractured the psychological $60,000 floor, washing all the way down to $59,285. That's down nearly 5% on the session. This cascading move cleanly severed yesterday's defensive support shelves, and it was triggered heavily by a massive wave of automated margin liquidations across the derivatives book right after some really heavy spot ETF outflows.
So here's the absolutely crucial point you need to take away. Do not let this flush shake you out. When macro desks hit an information vacuum right before massive economic data releases, what do? They pull liquidity out of speculative vehicles first. This is a classic programmatic purge. It's high-volume algorithmic behavior designed specifically to hunch your downside stops. They want to dry up the floating retail supply before the primary trend can safely reassert itself.
Right. Section 4. Berkshire's Value Allocation Shift, the Smart Money Pivot.
To really understand how the big money operates under pressure, we have to look at the defensive board. This exposes exactly how institutions maneuvered their capital during today's storm. And we saw an identical technical signature reveal itself with Berkshire Hathaway Class B shares. BRKB gave back a pocket of its recent premium, taking a moderate 1.38% dip to wrap up regular trading hours right at $488. Why? Because big fund managers use Berkshire as massive cash hoard as a temporary storm shelter when growth valuations fluctuate. The second the index futures flushed down to deep structural discounts this afternoon, those institutional desks immediately used Berkshire as a funding source. They shaved size off their value columns, took their profits at $488, and deployed that size directly back into the index core to fiercely defend those primary trendline filters on /MESU26. It's a smart money pivot, pure and simple.
Which brings us to Section 5, Professional Trading Directives, the Tactical Blueprint.
This right here is where we translate terminal data into an actionable war room blueprint. But before we get to the specific rules, you have to understand the 50-day exponential moving average. This is the primary line in the sand. On the September micro futures, today's high-volume flush brought price action into a direct critical confrontation with this upward-sloping EMA. And what happened? The active forward contract aggressively absorbed sell orders to hold this primary defensive structure right at 7,435. The market makers stepped up exactly where they were supposed to.
So here are your strict professional directives for managing your capital through a deep technical reset exactly like this one. Read them, memorize them. Number 1, stop attempting to pick exact bottoms in a cascading market. You're just catching falling knives, folks. Number 2, let major structural boundaries, like that 50-day EMA we just talked about, dictate your position sizing. Numbers 3 and 4 go hand in hand. Keep your sizing defensive and protect your cash optionality on the crypto side until a firm accumulation structure actually prints beneath that $60,000 mark. And number 5, let the verified levels do the heavy lifting. Do not front-run the data.
Look, when you look past the noise and follow the big money rotation, the chaos of a programmatic purge suddenly makes perfect sense. The ledger is locked, and the numbers never lie. So, what does this all mean for tomorrow? Are you ready for the morning bell? Thanks for joining me on The Explainer today, and stay disciplined out there.